Hi, this should be a short clip, a follow-up on my last clip about stock options. In the last clip, I warned you not to do options except in the rare case of predictable cyclicals that you sleuth thoroughly. However, on second thought, it seems I missed two other cases when you can do options profitably. These cases are rare too, but when they do come, you can do options and make multiples of your money fairly fast, or lose your money. Which cases are these? They have to do with market emotions. In stocks, Warren Buffett famously said, be optimistic when everyone else is pessimistic, but be pessimistic when everyone is too optimistic. Well, it's the same with options, only much more so. In other words, in options, this is so only at the extremes of fear and greed. And why do I bring it up now? Because 3.5 months ago, on April the 3rd, the market's panic was extreme. You could smell it. You could taste it. You could feel it in the air. The voices of TV announcers trembled. Your broker probably refused to turn your phone calls. And all your friends were selling in a panic on the quiet. But how do we know it was extreme panic? Because the Fear and Greed Index, which is published daily with a range of 1 to 100, was at 8. Yes, 8. At the time, I took a snapshot of it and showed it to you a day later. Remember? Just to remind you, and to prove I'm not lying, here it is again. Freeze the picture. So why is this important? Because the day after that indicator's extreme panic level, the S&P 500 opened at 52.20 and ended the day at 50.30. That meant the SPY, the SPY, the market ETF, which is 1/10 of the S&P 500, opened at 552 and ended at 503. A day later, the SPY fell further to 480, which was the market exact bottom. On that day, the panic intensified. The Fear and Greed Index fell to 6, which was lower than at the 2020 COVID bottom. How was that for panic? The only other time the Fear and Greed Index went as low was on March 2009 at the great financial crisis bottom, which was the grandmother of all market bottoms. So again, why do I bring it up? Because the SPY, which was then at 480 in April, is today at 628, or 31% higher, which in turn brings me back to options. If you had bought then a 1-year SPY call options with a strike of say 550, you'd have paid $5 to $8 for it depending on the hour of the day, say $8 average. And if you had bought a 60 days or 3 months option, you'd have paid much less. And what would this call be worth today? Well, today the call would be worth 78 or so. That's the 60.28 SPY price less the 550 strike. But it really is worth more because today the Fear and Greed Index is 75, which is borderline greed. So there's speculation the market is going higher still, and the option has a premium. So while the market rose 31% from the April panic bottom I pointed out to you, during that time, the call rose almost 10 times, depending on which strike and period you chose. Wowza! Which brings me again to my last video clip. In it, I showed you how doing options on cyclical stocks with predictable cycles, which you had sleuthed properly, can give you big returns. Sleuth how? You got it. See my books, the Sleuth Investor and the Advanced Sleuth Investor. Now, last clip, I gave you ALB, Albemarle, as an example of a cyclical stocks you can do options on. Since then, ALB rose nicely from 68 to 75, and its option rose even more. But I digress. The point now is, as I said then, don't do options except on predictable cyclicals. But it seems I had missed two other cases. These two are when the market has gone crazy, either with fear or with greed. See again this snapshot. See? On April 3rd, 3.5 months ago, the market went crazy with fear. If you had bought a call then on the SPY, you could have made 8 to 10 times your money, depending on which strike and duration you chose. But what of market euphoria? When did we see that? Well, we saw euphoria on November 2019, just before COVID, when the market fell completely. The fear and greed at the euphoria point was then a crazy 92. If you had bought then a market put, you could have made an equal return as on the April 2025 fears with a call. But whose money would you be taking in both cases? Why, the fool's money. Those who act like everyone else at the extremes, the lemmings. Never be a lemming, I told you. But does it mean you should always act against everyone else? Always? That is, always be a contrarian? No, not always. Just at the hysterical extremes. When the fear and greed index is less than 10 on a panic or higher than 90 on euphoria. The first happened on April 3rd, the second on November 2019. To sum up, do options only in 3 cases. First, on well-sleuthed cyclicals with a cycle period of less than 2 years and a goodly peak-to-peak rise, whose business you understand through your sleuthing. ALB is a case in point today. Second, you can buy call options when the market is wetting itself with fear, like on April. Third, you can do put options when the market is shouting with glee in euphoria, like November 2019. And of course, in all 3 cases, when you do options, you should be ready to lose all your money. In case you are wrong, I'm just saying. But yes, you could also make multiples of your money fairly fast if you chose your cases carefully, as you could have made since April the 3rd. I said if, and remember, the above is not a recommendation, just a demonstration used as a teaching aid. That's all for today. Please let me know what you think of the above, and if you like it, subscribe to the channel and forward it to all your friends and subscribers so they subscribe too, and buy my books, The Sleuth Investor, The Advanced Sleuth Investor, and if you like them, please give them a good review on Amazon, which I hope will not only be good, but excellent. I'll see you next time, and meantime, thank you very much for watching.